Welcome back everyone to the Crypto Rain channel. I'm your host Jay Murph, and today we're going to talk about getting wrecked. Now, a certain YouTube personality, if I have my numbers right, and I watch them sometimes, they actually have some really good information, and there's a reason why their channel has grown and they've done very well. But a certain YouTube personality got wrecked again for like 4 times in the last few weeks. And by wrecked, that means their position got liquidated on a leverage trade. So if you're very new to cryptocurrency, what does getting wrecked means? It means things went very bad for you. And on a leverage trade, getting liquidated means your entire collateral got wiped out on your leverage trade. So let me share with you what that looks like. Interestingly enough, even when the market is going well, and fair to say, generally it's been going very well for us this year, you can lose all your cryptocurrency on a leverage trade. And say you're going to do a leverage trade on Bitcoin. And let's say the market's going up and you're like, yeah, I think it's going to keep going up. And you do a leverage trade at, say, $52,000 on Bitcoin. And you put a whole Bitcoin up as collateral because you're like, I'm sure Bitcoin's going to keep going up, and you do 10x leverage on that Bitcoin. In other words, they take your 1 Bitcoin as collateral and they borrow against that to borrow 10 Bitcoin. So you're trading like you have 10 Bitcoin. Now, you can make a lot of money because say Bitcoin goes up by $1,000 and you have essentially 10 Bitcoin worth that you're trading. How much did you make? $10,000. Now say that goes down by $1,000. How much did you lose of your 1 Bitcoin because you were trading in leverage? $10,000 worth. Now here's the problem with getting liquidated. Say the price goes down a lot. Say it goes down by like $5,000 or just under $5,000. Guess what will happen to your 1 Bitcoin? The full amount will get liquidated and it will force a sale at that point on your Bitcoin. So, and it will close out your position so that the platform doesn't lose money and you just got wrecked. So let's see our trade here. Let's say you put in at 52,500 and you're like, oh my gosh, it's going to go up and you're going to do very well. Okay, so guess what happened? It did go up. In fact, let's look at a little bit better on the time frames. Let's look at the 4-hour time frame. So your position, it actually went very good for you, right? So it went down a little bit and your heart sunk all the way down to your knees and you're like, oh my gosh. But you held out and it went very good for you and it went to $58,000. So because essentially you're trading on 10 Bitcoin, your full position went up by $60,000, which is amazing. Until, goes down to here, and when it drops close to $5,000 less than your initial position, your entire position gets liquidated to zero. By liquidated, that means the platform that you were doing leverage trading on realized that your whole equity or the security that you put up for the trade was getting close to a value of 0 on the trade, or canceling out your equity that you went in there. It forced it a close on the position, and essentially you lost 100% of your funds. So you just got wrecked. Painful. Now, the reason I know so much about getting wrecked is because back in March I got wrecked massively, and in fact, as things were going down, I put more collateral in to try to keep my position from getting wrecked, which just meant when it eventually did get wrecked, I lost even more. That was bad. What I realized is I just wasn't ready for this, because what I learned about experienced traders is they learn to recognize when a trade is breaking differently than they thought and just pulling out and taking their losses. And their setups were a lot smarter, so that when they were making proper setups, their risk to reward ratio, say they think, well, it'll probably go this way, but if it goes bad this way, I'll lose this amount. But if it does go good, I will win by this amount. So say it's a 3-to-1 risk to reward, or a 2-to-1, or a 5-to-1 risk to reward. And so they're waiting for the proper setups where the risk is a lot lower than the potential reward that they could get if it ends up going their way. And with these proper setups, you literally can trade and only be right 40% of the time and still make money, because when you are right, you make 3 or 4 times as much gains as when you lose. So what I learned is, okay, I need to go back to school before I get involved in leverage trading, because even in a bull market, I could lose a lot of money by leverage trading if I don't know how to do it properly, and I did realize I don't know how to do it properly. So for those of you who are new to crypto, and you see some people make some massive gains through leverage trading, and you think you want to jump into that, I would just give you a caution, because most people I know that have tried that absolutely got destroyed. Why? Because it takes a lot of knowledge and understanding and technical analysis and reading charts, as well as knowing exact proper setups in order for that to work out well for you. I do want to give you a little bit of technical analysis education. There is something called the RSI, and the RSI is basically one of your best indicators to look at on swing trading. Now, I'm much more of a swing trader, or trading over like sometimes a couple weeks, rarely a couple days, but usually at least a couple weeks, if not like 6 months to 12 months, and sometimes even longer time frames. And so when I'm liking a cryptocurrency and I really want to know if I should buy more of it, the RSI is one of the best indicators that can tell you how strong of a buying opportunity is. So the RSI stands for Relative Strength Index, which it's relative to what's going on. But even if you look at the past chart, you'll notice some patterns. So when Bitcoin went way up, you saw the RSI break up close to 80%. It was then followed by a retracement. Here, it went up above 80%, and it didn't retrace right away when it hit 80%. But at 80%, you're like, caution, caution, there's probably going to be a pullback coming back. See, these are your buying opportunities when it pulls back like this, right? And so as it pulls back, you see the relative strength index go below 50 oftentimes. Now, do know that in a bull market, it doesn't look exactly like that. And we're going to go to the weekly chart so that we can look back into history here, because we want to look back at 2017. And we want to look specifically at the RSI. It has a very interesting RSI. Okay, so weekly isn't going to cut it for us. Let's go to the daily and just get back to 2017. All right. So here, your big dips, you saw the RSI drop a lot. But say you're wanting to pick up Bitcoin, and this works for all the cryptocurrencies. But you're waiting for these dips to then put in more fiat so that you'll hopefully do well. And see, if you notice when, I know what I'm not liking, there we go. You notice when they have these big runs up, there's usually a retracement. See, this is a lot better loading zone to buy more than, say, here, right? And so then there was a big fall off, and notice how low the RSI gets here, which was a great buy opportunity. So when you're thinking about buying more, the RSI is a great indicator. When you like a cryptocurrency and you want to buy more of it, RSI is your best friend. And this even works with things like Cardano. So in this case, we're looking at Cardano, and we have the relative strength index here. And see, when you're looking at good buy opportunities, you're waiting for things to hit down here. Now, if you happen to be, I think this is on Kraken, oh my gosh, somebody probably fat-fingered a market sell order, and it absolutely, they got crushed. Boy, I feel bad for them. They probably dumped a whole bunch of Cardano, and they end up selling some of it as little as 33 cents. I bet their heart totally sank. But somebody had some buy orders in and made a fortune. But on the relative strength index, you can see some good buy opportunities when you see this dip down if you're trying to buy more Cardano. Does that make sense? So this isn't financial advice. This is just some words of caution about leverage trading, as well as when you're trying to load up what some of successful traders, swing traders, look at as far as good opportunities to buy for whatever cryptocurrency you're looking at. If you're looking at Ethereum and you want to know where a loading zone of buying more is, even after this big dip here, notice the relative strength index is still fairly high, but if you had waited till it went down to 60% here on Ethereum, you did pretty darn well. This is on a logarithmic scale, that's why it looks like that. All right. So, and it's also on a weekly time frame. We want a lot smaller time frame in this case. All right, so if you notice when it went down to here to 52%, it then had a big run up. When the RSI was really high, that's a bad time to buy. See how you would have missed out on these good buying opportunities? So I just want to make that clear, especially for those of you who are new to crypto. For those that have been around a while, I'm just preaching to the choir here. You already know all this. But thanks for joining me. If you like the content you're getting here, subscribe to the channel and like it. I am just a cryptocurrency investor myself. I do have 20 years experience investing in real estate, but I was brand spanking new to cryptocurrency 4 years ago, and I learned some very hard lessons, particularly in 2018. I made some great wins in 2017, and then absolutely got wrecked in 2018 with just my swing trades because I didn't know how to take profits when it was good for taking profits. A mistake I don't plan to repeat this cycle. And I have been waiting since 2018 for 2021 because as I studied in 2018, I realized how cyclical the Bitcoin market is, and it follows similar patterns every 4 years. And about every 4 years, Bitcoin has a massive run, which has a lot of bleed over, at least starting in 2017 with the altcoins. And so hopefully that pattern continues, because if so, it's going to be a freaking ridiculous good year for all of us. With that, I will see you soon. Thank you for your time, and we'll catch you later.